Hi, my name is Sukrit Ghate, and today we are going to do the Nifty weekly analysis. So let's get started. In today's analysis, we are going to be looking at the Nifty weekly chart, and I'm going to be showing you a level that has been acting as a very strong resistance since the past few weeks. So let's see how that level has been acting, and I'm going to show you the possible outcomes of what can happen now. Right, so I'll start with the level itself. So to the naked eye, you can see the market has been a little bit of downtrending, right? A little bit downtrending, and then if you look at the bigger picture, like what I mean by that is not going to a monthly chart or anything, but just as you just see what's happening, this whole area seems a little bit sideways. But right now we are not doing trend analysis, it's not that important for the moment. I'm going to show you a level that is very important and has played a huge role in order of how the market has been reacting. So let's see how that level has worked. So if you see, the level that I marked is a weekly chart, and it's a rally base and a drop. So rally base and a drop. So this green candle is the rally, this one candle is the base, right? This is the rally, and this big red candle is the drop. Now if you see, when was this level particularly formed? This was in the last year, October, right? As you can see, it's a level that has been formed a while back, but it still holds a lot of weightage only because of the way the market has reacted to that level, and I'll show you how it's reacted. So the first thing you see is, once the level was formed, the market has done something that many a times is noticeable with such kind of formations. The next couple of candles after a formation itself, it enters that level, right? So as you can see, this is a weekly supply level, right? So here, first candle, nothing happened. Second candle itself, it entered the zone. So the weekly supply zone that this is. And the third candle, as you see, there was a drop that started forming. Fourth candle, there was a huge drop. So if you see, this is a very big drop, right? On a weekly chart, like a candle like this being formed tells you that the market has been falling for the whole week, and it's been falling with a lot of power, because if you see the high of this particular level, it's something in the 17,800 range, right? And if you see the low, it's somewhere in the 17,000 range. So what that tells us is almost a 700 to 800 point drop that happened in a span of 1 week. So you can see how well the level has worked for the first time, right? So the first time done. I'll just erase all of this. Then as you see the market, there are some demand zones that worked also, and the market went back again into this level. So if you see, this is the second time that it's touched. This was the first time, this is the second time, and again after touching, you can see that the market fell, and then fell again, went up a little bit, started falling again. And if you see the overall of what happened, the market fell all the way till somewhere in the range of 16,400. So second time the reaction was even bigger. Now let's see what happens for the third time. The market went back into the level. This is the third time this is happening, right? It's touching this level. It's come all the way, and this time it's come till 15,200 range, and yet again goes back into the level. The fourth time, now this is our current market. This whole area is the current market, right? So if you see, technically a fourth touch has not happened. This particular area, this can be considered a fourth touch, but again not really, because it didn't go into the zone. It's not very evident. But if it does come into the zone again, the chances are the zone's strength has reduced, right? Because it's already been touched 3 times, so the strength is definitely it's decreased. But we definitely have to be careful around this particular area. So I'll tell you the first possible outcome of what will happen. It can go into this zone, maybe deep into the zone, some candles like this, and then start falling. That is the first outcome. The second outcome is, again, this is quite likely, because let's say buyers are more on the stronger side this time. What can happen is this particular zone can be broken. So if this zone is broken, maybe not in 2-3 candles, but if it is broken, what is going to happen is the market is going to start forming highs. Possibly all-time highs are also there. So it can form all-time highs as well if this level is broken. But this level is definitely acting like a very, very big resistance, because supply zones and demand zones are reasons why support zones and resistance zones are formed, but at the same time they go hand in hand. So what we are going to do here is that our two outcomes are there, right? So the market can break this level, or the market will go into this level a little deep and then fall down. But we should be equipped for both. But as of now, we still have this level starts at almost 18,000 range, so we still have like 150 points of play. We can play around in that area. So if you go on the smaller time frames, you can definitely find some trades. You can also sell puts, you can buy calls, but I would suggest for now keeping it a little not a little keep it a little subtle. Don't go too aggressive on your trades. And I would also tell you that the market is definitely in a price range where this supply zone can work again very well, or at the same time can be broken, because it's been touched many a times, right? So 3 times it's already been tested. So what would we do is we would play around with that 150 to 200 point range that we have, and also not go aggressive on the trades. So for today, this was the analysis. Thank you very much.